Let's take question number 2 on page 27. From the following trial balance and adjustments given below, you are required to prepare the trading and profit and loss account for the year ended 31st March 19 and a balance sheet as on that date in the books of Shilpa and Katrina. Trial balance as on 31st March 19 is given. Very quickly, let's go through it. The debit balances side, the first item there, land and building, that is an asset. Furniture, asset. Sundry debtors are assets. Then stock on the first day of the year is opening stock, will go to trading account. Then bad debts goes to profit and loss account. Printing and stationery, profit and loss account. Wages, that goes to trading account. Then salaries, profit and loss account. Carriage inward is trading account. Sales return will be deducted from sales, which is on the credit side. So in the credit balances, tick mark sales. Then next is drawings of the two partners, Shilpa and Katrina, that will be deducted from the capitals of the two partners. Discount is profit and loss account. Advance given to Shahrukh. Advance given is like loan given to somebody else, and that money is going to be recovered in the future. So whenever money is going to come back in the future, that item is going to be an asset. Then the next two items also, cash in hand, cash at bank, both are assets. Interest is an expenditure, profit and loss account. Commission, profit and loss account. Royalties goes to trading, and purchases also goes to trading account. Now let's take the credit balances. The first item, capital, will be the first item on the liability side. Then next is bills payable, a liability. Bank overdraft, also a liability. Purchase return will be deducted from purchases. So on the debit balance side, tick mark purchases. Then next is sundry creditors, liability. Bank loan is a liability. Interest received is an income, which will go to profit and loss account. RDD, the one given in the trial balance, is always old RDD, and there is a specific way of writing RDD and bad debts together in profit and loss account. Then further adjustments given. The stock in hand was valued at 58,000 on 31st March 19. Outstanding expenses, royalties and wages. So let's tick mark both these expenses, they are outstanding. First is royalties and the next one, wages. Then on the next page, salaries paid in advance to staff, rupees 2,000. Paid in advance, which means it is a prepaid expenditure. So let's tick mark salaries. We will have to adjust salaries also. Then further, create a provision for bad debts 1,000 and reserve for doubtful debts at 3% on sundry debtors. Both are adjustments to be done on debtors. Let's tick mark sundry debtors in the trial balance. And also tick mark bad debts. That value is going to increase because there are some more bad debts. There is also RDD. So all of that together will be written in profit and loss account. Then the last adjustment there, depreciate land and building by 5% and furniture by 10%. So let's tick mark both those assets, land and building and furniture. Okay, now we are ready to prepare the solution. We need to prepare the trading profit and loss account and the balance sheet. All of this being prepared on 31st March 2019. All right, let's begin from the debit balances side. The first item is land and building, that goes to the asset side of the balance sheet. Land and building in the inner column. It has an adjustment 37,800. Then the next, furniture, also an asset. This also has an adjustment right in the inner column. Amount is 17,250. Next, sundry debtors. Continue on the asset side, debtors, inner column, 40,000. And this time There are 2 adjustments on debtors, so we will leave 3 lines there. Next, stock on the first day, that is opening stock. The first item on the debit side of trading account, write down opening stock 65,000. Then next is bad debts, that goes to profit and loss account. 2 bad debts. Inner column 400. Now this time there are totally 3 adjustments here which are going to be added with bad debts. So leave 3 lines below bad debts and continue. The next is printing and stationery, that is 4,000 in profit and loss account. 2 printing and stationery. Amount is 4,000. Next, wages, back to the trading account. Leave 1 line below purchases, there are returns there, and then write 2 wages. Again in the inner column, amount is 3,000. Next is salaries, that goes to profit and loss account. Write down 2 salaries. In the inner column, amount is 5,000. Next, after salaries is carriage inward, that is in trading account. 2 carriage inward. Amount is 4,000. Next, sales return will be deducted from sales on the opposite side. On the credit side, write down less returns. Amount is 2,000. Then, drawings of the 2 partners will be deducted from their respective capitals. So in the balance sheet, we have written the names. Leave that line, and on the next line write less drawings. For Shilpa, amount is 2,000. And for Katrina, write down less drawings. Drawings are 3,000. Then next is discount, which is an expenditure. It will go to profit and loss account. To discount, amount is 2,030. Next, advance given to Shahrukh. This is money given like a loan to someone which will be returned in the future. Taking a loan is a liability, but giving a loan is an asset. That money will be returned sometime in the future and we will be receiving it in the future. So write down on the asset side, advance to Shahrukh. And that is 10,000. The next 2 items also on the asset side. The first is cash in hand. 20,000. And next, cash at bank. Amount is 8,000. Then next is interest, that is an expenditure. Come to profit and loss account and write down to interest. 1,000. Same with commission, write down to commission. Amount is 2,000. Then the next is royalties, which is written in trading account. This has an adjustment, so write down in the inner column to royalties. Amount is 2,000. And then the last item there, purchases. We have written two purchases, right in the inner column, 50,000. Let's move on to the credit balances. The first item there is capital of the partners. So let's come to the liability side. Capitals, write down for Shilpa and Katrina, both it is 45,000. So write down. Next to Shilpa, 45,000. For Katrina, 45,000. Then next is bills payable and bank overdraft, both of which are liabilities. So after Katrina, leave about 3 lines and then write bills payable. Amount is 17,500. And bank overdraft. That is 10,000. Next is purchase returns, which will be deducted from purchases. So come to trading account. Below purchases, write down minus returns. That is 1,480. Deduct the returns, and in the outer column, what you get is 48,520. Then, next, sundry creditors, back to the liability side. The next item, creditors. Amount is 22,000. Bank loan also is a liability. Below that, write on bank loan, 15,000. Then next is interest received. That is an income in profit and loss account. The first line will be for gross profit and next will be for interest received. So by interest received, that is 1,500. Next is RDD, reserve for doubtful debts. The one given in the trial balance is always the old RDD. And an item now from the credit balances we are going to pick up, but write it on the debit side. And you can do that provided you write a minus sign before it. So minus, write down old RDD, and that amount is 1,000. The last item there, next is sales. The first item in trading account on the credit side, write down sales, 1,20,000. Deduct the returns, and in the outer column, what you have is 1,18,000. Okay, now we are done with the trial balance. We move on to the adjustments. Point number 1. The stock in hand was valued at 58,000 at the end of the year, that is closing stock. So credit side of trading account, first effect, write down by closing stock. Amount is 58,000. And second effect, closing stock is an asset which will be written in the balance sheet. So on the asset side, write down closing stock. That is 58,000. Then point number 2 is about outstanding expenses. There are 2 of them. First one is royalties. So come to the trading account. Below royalties, write down plus outstanding. That is 1,500. Add up, and the total in the outer column, 3,500. And the next one is wages. So below wages also write down plus outstanding. That is 800. Add up, Total wages in the outer column 3,800. Now, second effect of this outstanding is a liability. Expenses which are yet to be paid, they will be paid in the future. Money will be going out in the future. So that is a liability. One below the other we will write down. First, write down outstanding expenses. The first one was royalties. That was 1,500. And next one, wages, 800. Total outstanding expenses in the outer column will be 2,300. Then, point number 3, salary paid in advance is 2,000. So, salary written in profit and loss account, we have written in the inner column because there is some amount paid in advance, which means the expenditure is prepaid, which we will deduct. Minus prepaid, that is 2,000. Deduct, and in the outer column what you have salaries is 3,000. Exactly opposite of outstanding expense is prepaid expense. So the second effect will be in the balance sheet on the asset side. Write down prepaid salaries. That was 2,000. Then the next is create a provision for bad debts as well as a reserve for doubtful debts. So bad debts and RDD both are adjustments on debtors. So come to debtors in the balance sheet. And out of the two, the first one will be for bad debts. So what we will do is deduct bad debts. That is an amount which is not going to be received from your customer, bad debts. So deduct 1,000. And because there is another adjustment, you take the total after deducting in the inner column itself. 40 minus 1, that is 39,000. Okay. This bad debts has to be recorded in the second place, and that is in profit and loss account. We have already written bad debts. Below that, you will write plus new bad debts. Some more bad debts are there. There is some more loss. So it will be debited, which is why we add it here, plus new bad debts. And that was 1,000. And now for the second part of the adjustment regarding RDD, that also reduces the value of debtors. It is an amount which you may not receive. So make a provision for that, make a reserve for that, deduct that amount, write down less RDD. And that is to be calculated at the rate of 3%. Now this time you will calculate 3% of 39,000. That comes to 1,170. So let's deduct. In the outer column, what you have is 37,830. Second effect of this RDD, we have deducted from the asset side. It will go to profit and loss account debit side, and along with bad debts. Now the last part over there, write down plus new RDD. New RDD was 1,170. Now we need to take this all four figures in the outer column. Out of that, 3 items are to be added, and only old RDD will be subtracted. So do the calculation. What you have in the outer column is 1,570. Okay, 2 effects are done for both of them. Point number 4 is complete. And now point number 5, the easy adjustment regarding depreciation. The value of the asset is going to reduce. 2 assets. The first one out of them is land and building. Write down below that less minus depreciation. The rate of depreciation for land and building is 5%. So when you calculate, that comes to 1,890. Deduct and write in the outer column 35,910. And there is one more asset, that is furniture. There also write down minus depreciation. Rate is 10%. So at the rate of 10%, that is 1,725. Deduct and write in the outer column, that is 15,525. Now, depreciation, both of them will go to profit and loss account. One below the other, we will write down to depreciation. In the inner column, the first one was land and building. That is 1,890. And the next one was furniture. 1,725. Add up and get the total depreciation in the outer column. That comes to 3,615. That's it. All adjustments are complete. Now what we will do is close the accounts, starting with trading account. We need to check which side is greater. In this case, the credit side is greater. There are two figures there. When you add up, that comes to 1,76,000. Same total on the debit, 1,76,000. And since the debit side is less, we will have to put an amount there. That balancing figure is known as gross profit. So write on the debit side to gross profit carried down. When you deduct the figures of the debit, what you get is 51,180. And this gross profit will be brought down in profit and loss account. So there write down by gross profit brought down 51,180. Then same procedure for profit and loss account. Here also the credit side is greater. Let's take the total there. There are two figures. The total there, 52,680. And now deduct all the debit items and find out to net profit. This net profit, whatever we get, will be divided between the two partners. The first partner, Shilpa, and the next, Katrina. Now here, the profit sharing ratio is not given. So whatever net profit we get will be divided in the equal ratio. They will get equal profit. So when you deduct the total net profit here, that comes to 35,465. This has to be divided equally for the two partners, Shilpa and Katrina. So when you divide by 2, what you get is 17,732.5. Now to round that off, one partner will get 50 paise extra. So let's give Shilpa that 50 paise extra. It will become 17,733. And for the other partner, we will remove that 0.5. It will become 17,732. Okay. Net profit here now will be added in capital. The owner's wealth in the business is increasing. So let's add right up in the balance sheet on the liability side for Shilpa, right, plus net profit. That was 17,733. and for Katrina plus net profit, it was 17,732. Both the capitals, now we will take it to the outer column. So for Shilpa, one item drawings has to be deducted and the rest has to be added. What we get is 60,733. And for the next partner, Katrina, when you add up, what you will get is 59,732. That's it. Now we need to add up the liability side and the asset side. And if everything is done correct, your balance sheet should tally with the same figure. So let's add up and check. Here the balance sheet is tallying at 1,87,265. Both sides, the total is equal. That was the balance sheet total. Now have a look at the entire solution. The trading profit and loss account and the balance sheet. That's it. Here our solution is complete.